Hello and welcome to video number 2. It is assumed that you have already watched video number 1. If you haven't, please stop this video and watch video number 1 from start to finish first. That way this video will make a lot more sense. And in this video what we're going to cover is what are F-dates. Before we talk about what F-dates are, let's take a look at the F-date report. Now here's an example of a previous report. This one here is of week ending April 2nd, 2021. The date of the report is always the Friday date of the week that just ended. And the report is usually uploaded on a Saturday, sometimes Friday evening, sometimes Sunday morning, but usually Saturday, and it's always been available every weekend without let up since 1996. You can see that it's divided into columns and it's sort of a spreadsheet format. On the left you see market analyzed. These are the markets that we currently cover on the F-date report. If you happen to trade Forex, you can use the currency futures that are listed up here. We have the column that says front month. That's basically the month that's currently trading, and it's the month that's currently being forecasted. The rollover date gives you the date when to expect to roll over to the next contract month. So for example, you can see in the currencies here, they would roll over from June to September on June 8th, which happened to have been yesterday. So this week's F-date report will show all these as September. Here we have the weekly turn dates, or WTD for short. These turn dates are F-dates for the weekly time frame. These over here are daily turn dates, DTD, okay, daily turn dates. These are turn dates, also called F-dates, for the daily time frame. So you have a weekly time frame and you have a daily time frame. We'll cover that more when we look at the price chart. And over here we see a visual of what to expect for the next 7 days. And it's broken down into a visual representation of cells. So for example, the next F dates listed here in the Australian dollar from when this report was released in April 2nd is April 7th and then April 12th. So if you look in the visual here, you'll see that April 7th or the 7th is marked with an X, and you see the 12th is marked with a dollar sign. And I'll explain that right now. The little asterisk you see right next to 412 here, we call those dollar sign F dates. And that's because I use a dollar sign to indicate them on the visual cells there. The difference between a dollar sign F date and a regular F date, now F dates in itself is a strong indication of a turn. So let's just assume that you add a little bit of additive to your gas tank. That would be the dollar sign F date. It's just one of those dates where you really want to pay attention to. But it does have a higher indication, and that's why it's marked with the asterisk and the dollar sign on the visual cells. Another thing you might see, though it's not on this chart here, is if you see a little period in the cell next to the X. It might be in the cell before it or the cell after it. And that would correspond with an F date that had a minus or a plus next to it. So if you saw this as 47 minus, 47 would have an X in it and a period here for the day before. And all that's saying is that there was indication that 47, although being the turn date, there was a 4-6 indication as well. And so I could have marked it as 4-6 plus, 4-7 minus to kind of cover the two. But it's just an indication that the center of the turn date was expected 4-7 in this case. And, you know, it's possible that it could be 4-6. So that's basically what it is. And it's just, I don't use it as much, but When there's a really strong indication or it just becomes so obvious, then it gets included in the F-date report. These weekly turn dates represent, for example, turns on a weekly chart. These represent turns on a daily turn date. So here's what we're going to do. We're going to go take a look at the Australian dollar, which is this top one right here. Okay. And here's the Australian dollar, and you can see I have it set for daily. If you click on the W, that would be weekly. Okay, so you have daily, weekly, monthly. We do not have monthly turn dates on the report, so we'll stick with weekly and daily. Okay, and I'm going to put my little swing lines back in there just for visual ease. So let's assume that we're back here on April 2nd. We just had this report uploaded for that weekend, and we're now going to be looking forward to the upcoming week in trading. If you'll notice, previous here is just telling you that the very last F date on the previous report was 4/1. So it's there just as a reference. That was the last F date of the previous report. We had a 4/1 F date for Australian dollar. If you come over here, you'll see that 4/1 is that very bottom right there. And it turned out to be a significant bottom, which was nice. And if you looked here, you can see these dates. As I move my cursor over each one of these bars, that date changes. So you can watch along with me as I put my cursor over here and look down there and look at what the date is. So you can see it was April 1st, Thursday. Okay, so now the report comes out. It's the April 2nd report. So it's this weekend right here. And it's telling us that we should be looking at April 7th as a high probability turn. Okay, April 7th, 4/7 is the F date, as listed right here. So these are F dates, these are F dates, these are all F dates. All these dates are F dates. By the way, F date stands for future date. So the fact that we have it on the report for April 7th, and April 7th hasn't shown up yet because it's only April 2nd or April 3rd on the weekend when the report was uploaded, it just makes sense to call it a future date. And that's what F dates are, future dates. So if we look on the chart, we can see that prices rose until it made a top right here. And you'll notice that it happens to be April 7th. We went from April 1st, which was the previous F date. It nailed that bottom. And then we have April 7th, which is that top. Now, in a perfect world, every single one of these turns would be nailed on time. In fact, in a perfect world, they not only would be nailed on time, but we wouldn't miss any of them. Well, I hate to break it to you, we do not live in a perfect world. And F dates are not infallible. Sometimes we get our hopes up. The Holy Grail, I have never preached that F dates are the Holy Grail. They're just a powerful tool, as you will see. Because there's also an element of randomness in the markets, if markets had no randomness, it was purely of precise cyclic wonder, geometric proportions, and the whole bit, we nail every one of these on the spot. But there's an element of randomness that kind of keeps every one of us honest. And so what I'm trying to say with all these convoluted words is that while the F date is listed as 4/7, for example, you must start looking for the possibility that it could happen on 4/6 or maybe a day late at 4/8. But that's it. It either is going to be on time or it might be one bar early or late. In this case, though, it nailed it on April 1st. It nailed it on April 7th, and you must be going mad with amazement I'll bring you back down to earth. We're not going to be hitting every single one of them, like I said, that way. We hit these two, that's great. Now, what was the next one after that? Well, we said we had a dollar sign F date of April 12th. All right. So we come down, and April 12th is right there. You notice something that happened here? April 12th fell right between this swing top, this swing bottom, right smack in the middle. So it encompassed both turns, but what we really care about is that following swing bottom right here led to this big old move here. This was our dollar sign F date for one, and it was only one bar late as far as that bottom is concerned. That's pretty darn good, even though it wasn't exactly on April 13th. Well, let's just take a look at the next report here. The next weekend was right here. April 9th was the end of the week. And so that weekend, this report came up, and now we have the next. We now have the next week. Okay, well, we already know about 412. Okay, because it was in the little bonus 2 columns here, so we knew in advance. And we can see that April 7th was the last F date. April 7th is the last F date of this week. That's the yellow part right here. The 12th is the following week. That's why it's not listed. That's why 7 is listed in previous, but not 12. Okay, 7 is right there, but 12 is, of course, part of the new week. So we have the dollar sign. We already know about that. Now we have the one that follows that is listed as April 19th. And so from here, we're going to go up. And right there is April 19th. And do you notice that again, we have this, here we have a swing bottom and we have a swing top. So right there, but it nailed that within one bar. We've seen 1, 7, then we got the 12, we got the 19. Would you say that that's coincidence? Or would you say that there is definitely something about these F dates that are just... Some people take a little bit of convincing, but I'm hoping that this consecutiveness will show you that this is not rolled out of a Yahtzee cup. The next thing to look at here is the next report, and that's week 16, and you'll see that what follows April 19th, we have April 23rd. So we go down from the 19th and we come right here, and that's the 22nd. There's the 23rd right there, right? April 23rd, yep. Okay, you can see that it's within one bar. But here's something interesting again. It's right between two turns. When the F-date software churns out this information, if it's smack dab between two turns, top, bottom, top, whatever, it can't represent it as 2 dates. And I could not put it on the report as 2 dates. Could you imagine if I put 13, 14? And then you had to then go, okay, that means 12, 13, 14, 15. That's a whole 4-day window. That would be crazy. So this is why for every F date, you really need to keep in mind plus and minus 1 bar. And just because you get a turn on the minus bar, don't think you can't get another one on the on time or plus 1 bar. That is so important, and it'll bite you in the old butt if you don't keep that in mind. The beauty of the F dates, by the way, is if you watch them and there's no turn on the minus 1 day and there's no turn on the on time day. What does that tell you? that the probability is through the roof that it will be the +1 bar. The next F date, and I think we're going to stop going through the chart at this point. I've got 429.54. All right, so let's see what we got here. 429. What was the last one? We stopped at right here, 23. Okay, so we went from this top to this bottom, and then you go to this top. Look at that. 429. Isn't that fantastic? And that last one was 5.4. Look at that. Boom. Okay. All right. Bam, 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 bam. All right. Let me mark those for you. Okay. Here's one. Then we got that one. Then that one. That one. That one. And that one. Right? Okay. Notice that I did not include that one, and I did not include these two, although they were also within those F dates, because I just wanted you to see how it nailed this pattern. And by the way, this top right here, 78.23, is higher than this one, 78.20. So that line could have just technically gone all the way up to there. So anyway, if you, oh, and we got this one here, right? 5.4? Okay, sorry. And that one. Look at that. All right? I just love it when a plan comes together. You have to admit that that's pretty incredible. And you're probably thinking, wow, I could have just bought, then sold, then bought, then sold, then bought. You could have. But you would be disregarding one very important and wise piece of advice, and that is, you don't know that it was going to do that for sure, did you? That's why you need to have a plan. That's why you need to use certain common sense rules or guidelines, and you should try to stick with the direction of the trend. And in our case, that would be trading away from a confirmed weekly swing bottom or swing top. Now, with this said, now you know what F dates are. Daily F dates represent expected turns plus or minus one price bar on a daily chart. And on a weekly chart, we use the weekly turn dates, the WTDs. So we're going to talk about buy and sell setups in video number 3. And I'll see you there.